All right, guys, welcome to the Independent Investor Channel live stream. My name is Ryan. I've kind of been having a pretty awesome conversation with the group already. I glanced up at the clock and I was like, okay, I better pop on here and actually deliver this live stream that we've been doing for the last year and a half, I guess. Lots of different reasons. The live stream has evolved in quite an awesome gathering of folks who don't mind coming on for a few moments and talking about my favorite topic, get to bounce ideas off of the community and myself as well. I just got off of the phone with one of the subscribers actually. And if you do prefer to maybe reach out and talk to me directly, shoot me an email. The time from 8 to 9 o'clock was actually Doug Whitaker's friend. So I just talked to Krishna, who joined us last week there, Doug. So had a very good conversation with him. Just getting started in the stock market and would have preferred to talk to me directly. Sometimes that's better. I find more value in that because I get to Q&A you and find out what I kind of need to maybe help you put your nose on different avenues, cut through a lot of the noise. And that can really help a new investor when you're looking to just get some direction. So I'll extend that olive branch for you guys. If there's somebody out there that's just chomping at the bit and really feel like we're not reaching you through this live stream, I have a lot of fun on the live stream, okay? But I do understand that the topic in and of itself is extremely serious. It really is, especially now. And, we're all enjoying being investors right now. And it's been rewarding, okay? But I do get the sense that it's easier to get caught up in the euphoria, and I do believe that we are somewhat there now. I'm of the impression that perhaps maybe we're in somewhat of a slowdown right now, and this is typically what happens. It'll kind of sneak up on you a little bit, and it'll bite you because it'll do this right here where it's somewhat tempting, and you say, well, this is going to still continue on, and it can tempt a lot of people back into the market. It's been choppy. So we have these up days that you think everything is well and good. And then you've got days like today where it was up in the morning. I think I made a swing of about $600 to the positive and finished somewhere in the negative. I don't even know. I didn't watch it in the afternoon. It was some interesting news today. Certainly we'll get to that in some of the highlights, but I definitely want to address the week's business this week. Certainly after last Friday, Saturday night, we ended up doing a collaboration video with JMac Investing. I thought that product was awesome. I thought it was a lot of fun, actually. I enjoyed talking to Jason offline, but I actually thought when we threw down, I thought it was a pretty good product. I hope he's feeling better. I've held off putting that on my channel for a reason. Okay. Number one, I need to get with Jason offline and get that over to me through content. But I'm insisting that if you're going to catch the content that we collaborated together on, you need to catch it on his channel. Okay. He needs the support, and then I'll strategically roll it out when I feel like it'll be the best benefit for him. Okay. I was satisfied. It was about an hour and a half product that we threw down on. And I was very satisfied. There's some really good back and forth. Not all investing centric. I think that getting to know the channel creators, I hate to even dub myself that, to be honest with you, because I popped into the live stream on Wednesday, as Jason can tell you, and I think that he was doing a little get back and forth, another collaboration with one of the channel creators, and he's like, man, this is cool, man. The independent, he's got a huge channel. And I was like, well, I don't know, man. There's some folks on YouTube with some really big channels. You guys know that have been with me for a long time, what I value and what I kind of don't value very much. And for me to have the opportunity to come on to the live stream and discuss my favorite topic with just an awesome group, man, I can't tell you enough It's funny how you kind of feel like you get to know some folks, and some folks have reached out to me in private. That means a ton to me. Christopher Blaine, I see the one and only Doug Whitaker in the group here. Christian has kicked into the group here. He says, "Thanks for calling, sir." No problem. You don't have to call me sir. Just Ryan is good enough for me. I'm humbled at the opportunity. Some of the folks are relating to the message, and there's a reason for that. I don't consider myself a teacher of this, and I want to be very crystal clear. I would like to consider the Independent Investor Channel more of an introducer to the topic, and just to highlight where the highlights should be for you. If you are entering into the market, I'm very humbled. You guys know that I don't typically like to blah blah and toot my horn and whoop-de-doo, and I'm the greatest YouTube channel of all time. I will probably be coming out with a YouTube channel cover of my favorite YouTube channel, which aside from me is the Joe Carlson Show. I will be doing that on my own accord, because I want to, number one, and it's all going to be positive, because I think that individual is providing more value over YouTube than really anybody that I've seen from my perspective. Now, there's a lot of value from all the content creators, even in the group here. And I think there's a lot of benefit from hearing a lot of different opinions on how they seek out their exposure to the stock market. That's the official way of saying it. Or my way of saying it is just to say, look, if you want to become an investor, look at it like you're becoming a participant. Okay, you're becoming a participant. If you like Home Depot, maybe consider buying some stock in Home Depot. If you like Costco, maybe consider buying Costco. If you don't like the idea of buying single stock, look at the alternatives out there. It doesn't mean that it's going to be the scariest thing in the world for you to just gain some awareness of some of these products and gain some awareness on some of the accounts out there, and put those two together. Now, it won't cost you a dime to provide yourself that awareness, and you'll be more fit to make an educated decision about your own financial direction. Perhaps maybe you don't enter into the market. That's fine. I respect that. I think you should explore all your options. Okay. Again, I want to make sure that we're making educated decisions about our individual situations. I can't do that for you. Okay. So the real value here is to provide those highlights of why I do this thing. Okay. But we've got a great community in here. I do want to cover, but again, Jason, I hope you don't mind. I was probably going to release it, and it was probably better that you didn't send that over to me via WeTransfer. Please do that. All right. Send it over to me. It's easy to do. If you had some problems with that, please let me know. But I'm glad we're waiting on that, because I want folks to continue. I think that was a pretty successful live stream for you, I believe. I just reviewed it before I kicked onto your live stream on Wednesday for the first time, and watched it all the way through, and I was satisfied with the product. But anyway, got a lot of community channel creators. That's kind of my endorsement for the week, and I'm looking forward to doing this coverage. Joe Carlson just did a video that I watched last Sunday, and I've watched most all of his content, not all of them, but most all of them. But the one was in response to the dividend irrelevance theory. You guys need to catch that. It's good. It's very, very good. He's shooting responses rapid fire through YouTube, and it's quite good. It is quite good. But I will be doing a review of that channel nonetheless, because I want to. I just think that there's a lot of value there to be had if somebody is willing to consume that content. It's time well spent. Very easy to follow. He's easier than me to follow for sure. I'm a little choppy in my delivery, a little more raw, a little more uncut. That's fine. But anyway, I'm going to be doing that coverage. But let me cruise to the top here and see if I can't get some of these guys recognized in the group. I saw him kick in. A Gen X investor says, "What's up, everybody? Hey, independent investor, how are you?" A Gen X investor, we've got some backfill. I think me and you. I think me and you need to get together at some point. I think you're next on the line. I'd like to go through all my channel creators. Actually, I would extend that olive branch as well to the financial investor. I'm enjoying those collaborations, and I think me and Brent could probably do something special as well. Now that I know how to do it, I'm a little more open to throwing that opportunity out there for the channel creators as well. I think it's cool. I think there's something to be had. It's you get one individual opinion and is it one way, and then you get one individual opinion. But when you bring two people together, I think you really kind of get an interesting consensus, and there's some magic there. I think between a couple different styles, and I think that was evident as well in the video that I did with JMac Investing as well. Pretty cool. I think there's a lot there. I think as long as viewers of that content benefited from it, then I'm all about it. I really am. I think it was pretty cool. So, um, the Wright brothers. Anyway, so Gen X and got Brent here with the financial investor kicking in on the live stream. That's awesome. Of course, J Max in here. I don't know what he's got going on with his evening, but probably got me on the play. That's awesome. Thanks. Welcome to you. And then certainly had some other channel creators, I believe, in here. But I had some interesting questions pop into the stream here. But just in closing, I typically give an opening for folks that come in to the live stream. Maybe it's their first time. Maybe they re-review this content. A lot of different benefits from this opportunity. Okay, instead of going in once a year and getting some exposure, being told what it is that you need to hear, maybe not necessarily what you want to hear, but you don't know either way. But you get a one-time sit down once a year with the financial planner. We're trying to ignite this conversation so it's a little bit more commonplace for regular people. Regular people, okay? We're trying to make it more commonplace. And it seems like to me, one of the barriers to entry is that people are way too private with this stuff, okay? And I understand there's an element of privacy that needs to be maintained, but not from an awareness perspective. I will not buy that, okay? So don't try to come and sell it to me. Don't. Like, Ryan, you're misguiding people. No, we're providing awareness, okay? People need to know that stocks are out there and they can be bought within a retirement account. They need to know that, okay? Whether or not they act upon it, that's their business. But there's enough adults in this who do not want to be patronized. They come onto my channel because they know that. They know that we're going to identify options, strategic options, okay? And if you know it all, wonderful. But I will contend that there's probably some highlights that I throw out there that you may not be aware of. Why is that? It's because I've picked up a lot of these tidbits by being plugged into this community. Okay. You guys teach me a whole lot more than I teach you. Maybe. Maybe. But it keeps you plugged in, right? I was introduced for N1 Finance through YouTube. I was introduced to Robinhood through YouTube. First trade was brought to me by one of my subscribers, my very good loyal friends in the channel, and said, Ryan, you need to look at this. This fits like a round peg. It'll help a lot of people get their free access to the market. This is what you're looking for. Looked at it, agreed. It fits. But a lot of people perk up when you say, look, you have the ability to buy whatever you want in your Roth IRA. Okay. People perk up when they say, what are the benefits of the Roth IRA? What do I get out of it? What is this 59 and a half thing? What is this tax protection thing? What is the difference between a Roth IRA that's managed and a Roth IRA that's self-directed, right? That should perk up a lot of people because I have not received the level of confirmation that I would need to make me feel comfortable to say that this topic is saturated. No way. That's why I do this. That is absolutely why I come on and continually look to stoke the fire on this topic for folks, because for a lot of folks that have been with me for a long time, it never hurts to readdress these topics. They don't change. They're fundamentals. They don't change. And it helps. And maybe if I say a fundamental that maybe you didn't have quite a good grasp on, that you have a better grasp on now, perfect. Um, ETFs. ETFs is something that we throw out there as, the passive tool for individual investors that come in and say, Ryan, I get it. That's very interesting. Um, I've been a passive investor in a 401k for 20 years, and I just found your channel. What does it mean? I've already invested, so I don't need you, right? Not necessarily. You may look at the restrictions or the lack of opportunity via options through your 401k. And you may look at the independent investor channel and say, wow, can I start an individual account on top of your 401k? The answer is yes. Do you have more options within that Roth? Yes. Are you diversifying your opportunities? Because with the 401k, you're going to get X performance. Wouldn't it be nice to get X performance in the 401k and then a different level of performance in your Roth IRA, different level of protection as well? And a lot of people like that as an idea to be a little bit more aggressive. Maybe they don't want to contribute more to a 401k. Maybe they look at it as an opportunity to strengthen their existing investment profile or layer up, as I talk about. Um, and they can do that by exploiting a lot of the options. Maybe they justify self directed investing because they've got that other stuff in the 401k that's passive. They don't touch it. Maybe they want to get a little bit more aggressive. Okay. All opportunities for all different styles of investing out there. We really don't discourage from any of the styles as long as you're willing to take on the level of risk that certain styles present. Okay. The higher the risk, the higher risk profile you need to have to take on that. And a lot of people who approach me are just like, I'd like to become a participant, but I'd like to ease myself into it. I don't want to be scared off the market. And there are absolutely options out there for you guys. Okay. So I've got Tim Tellers in the group. So it's just got home from a 12.5 hour day. That's a good one, man. Welcome to the live stream, Tim. Awesome. Great to see you. I know it was, I'm going to shower now and we'll definitely kick back. Awesome. It's amazing. There's a ton of people, I think, that kick on here that don't leave comments. There's a ton of people that re-review this after we upload it to YouTube. And hey, what the heck? Are we making a little dab of a difference? I think so. I'm very transparent with how I deploy my program, what it means to me, what it means to be a participant. And, I've said it before and I'll say it again. I don't think I could imagine life without being an investor. It's one of those opportunities that I'm way too opportunistic to somehow justify myself off of the opportunity that investing has to offer. And I'm so glad that I've found the opportunity to trust myself and not have to be subject to trusting somebody else. I've said many, many times in this life, anytime I've ever been successful in life or got ahead in life or felt like I could really take some comfort in acknowledging the level of success that I've had or even acknowledging some of the mistakes that I've made, they've always been so much better if I was the one responsible for it, me. Why? Why is that? Because I'm the one who is the most trustworthy. And I feel like a lot of people out there feel the same way. And this awareness or opportunity that I present to you allows you to do just that, is to maybe fine tune your program. I don't know if you guys have the same sick feeling in your stomach, maybe when you go in and you seek out representation where you feel like maybe this isn't the right thing to do, but you have some pressure to do it anyway because you know the importance of investing and this is the way your friends do it and this is the way everybody else in your neighborhood does it and this is the way your family does it. This is the way grandma and grandpa have done it for years, so therefore it must be okay for you to do it that way, right? This is your wake-up call. It really is. This is your wake-up call. If you've ever wondered about the prospects of doing something a little bit greater than yourself, this is your wake-up call. The independent investor channel opportunity is just that. If you've ever wondered about buying single stock in the stock market, this is your wake-up call, right? If you've ever wondered about, corporate America and how they seemingly have the thumb on the working person, do something about it. This provides that opportunity. This is your wake-up call. All right. And that's a really, really powerful message, man, because a lot of people, if they've ever, felt a little bit hopeless, or they felt like they can't do it, or they felt like they don't have the expertise to do it. I don't even know what that means anymore. I don't. Perseverance can go a long way. And a lot of people can take that perseverance and gear it in the right way, as long as they're put on something that people can look at, and you don't have to be an expert. You just look at it and say, wow, it's free. It's free. It's free. Here's the benefits. Wow. How do I deploy this? Wow, there's options. Boom, boom, boom. And you can do it. It's a very simple approach. The landscape is yours. The menu is yours to choose from. That's the cool thing about it. And certainly, I do think we're making waves. I really do. I think we're making an impact. And I know there's a lot of folks in the community who feel the same way. They have to. They have to. I feel that way. No doubt about it. But I think instead of looking at investing as being, okay, I enter 5 shares of VOO into a self-directed account. I'm off and running. This is awesome. I'm fired up. Okay. And the market goes down, and you're down $125 of your hard-earned money. Okay. That is not investing. That's not why you're investing. You're investing to become a participant in the S&P 500. You're looking to move from a non-investor to where you are static. Okay. You're guaranteeing yourself no appreciation, and you're guaranteeing yourself probably no depreciation as outside of inflation. Okay. But for those that are willing to step out of themselves, take a chance, do a little something that maybe is an attempt to get you out of a little bit of a rut. Yeah, people get in their comfort zones, right? Those are the toughest people for me to reach, no doubt, because they'll come on and watch this for 5 minutes and they'll be like, really, a t-shirt guy? I mean, I've showed you my bare feet before, because I don't think to be a successful investor, you need to have a suit and tie. Sorry, don't think so. No, not in my world. No way. I don't think you need to be subject to a $1,500 course. I don't think you need to pay special access to view a portfolio with the idea that somehow you're going to get some magic idea from that portfolio reveal and be able to duplicate and scale that for your own success. You'll fail doing that. You'll fail. All right. We talk 90% of the time on the Independent Investor channel about the psychology of investing. So much more important than buying the S&P 500. Anybody can do that. Okay. I've always contended if you take 10 investors or 100 investors or 1,000 investors, you put them into 10 shares of the S&P 500, you will get 1,000 different outcomes out of that portfolio. Okay. So choose yours. All right. All right, cool. Let's cruise down. I got Clarence Lampkin in the group here. Looking forward to the stream. Might actually be able to listen to it in its entirety. Well, strap on your safety belt. I usually go for about 2 hours. So, and I'm drinking coffee tonight, so I might be a little sharper than most. And my good friend Christopher Blaine's in the group here. Says, good evening. It's awesome to see you, my friend. Very good. I'm glad to have you, man. So, Bob, we were conversing before. He always kicks on early. I enjoy that. So I'll come and make sure that if he has some, that's the best time to catch me, honestly. I do not see a reason for much upside right now. I'm about half in cash. So I like that. I do. And to each his own. Okay. I mean, there's going to be different schools of thought on this. Some people are going to think I'm crazy. Ryan, you should have, all 375,000 of your dollars in the stock market. That's a lovely position to be in, to be able to sit back and be able to play with somebody else's money. To each his own. I mean, if you're sitting on a couple $1 million and you've got $375,000, it might be appropriate for you to stay the course. Okay. Um, but I always look at investing as a game of relativity. Okay. Your risk always has to be in line with your risk profile. Okay. And I'm always assessing whether or not my exposure limit to the market is appropriate. Now, there's going to be a lot of different schools of thought on this, and there's going to be people who come on and say, okay, I disagree. This guy's back and forth willy nilly. I disagree. I've pumped the realized gain up in the portfolio to 18,000. I just did a rollout for you guys. I was 14.8, something like that. That's been boosted to 18,000. I've generated more money by manufacturing it than by nature of capital appreciation in the market. That's just the truth. And a small stipend with dividends. Okay. Love the dividends. That's great. But three different sources of potential income that you can extract from the portfolio, all of which in some form or fashion gets rolled back into the portfolio. The portfolio that I declare to you guys, what you don't get to see is the sausage making over the years of generating little dabs of profit here, 200, 300, 150, 125, 129 and change, all the different. I should really show you the laundry list of green that I have from this year. There's about 4 or 5 trades that didn't work out for me. But I think I've got about 18, it's 18,000, about 20 or so thousand, and a few thousand in lost trading. Okay. Was it worth it to make 18,000 and lose 3,000 for a net of whatever it is, 15,000, wherever we are now, 16, 17,000? I think we're up 18,000. So was it worth it? In my mind, yeah, it's worth it. That capital is all protected within the Roth IRA, but um, certainly very, very interesting right now with really focusing in on what program is good for you. And it sounds like that's what Bob's done. I think I'm sitting on about 40% cash right now. Um, and I'll be patient on this. I really do. I look at it as kind of a layered buffer within the portfolio. I'm good with it. I don't have a strategic goal of becoming a millionaire. I don't. I don't. I want to take on as much risk as I need to when I need to take it. And the most successful strategies right now that I'm deploying are the dividend strategy and the manufacturing of capital within the portfolio. The appreciation capital is providing about a 4% clip right now. I'm about up right now 4% in the indexes, right? You guys are probably the same, 4.5%. If you've just entered it, if you've owned them all year, you're probably up 20, 25%. So you've created a lot of income from capital appreciation. Okay. Right now, I haven't owned those, and I own small pieces in the indexes. VYM, VTI, VOO, VNQ has done quite well, and the utilities have done quite well. So I'm up fairly good there. Have not taken profits there yet. I don't know. It's a nice option to have, either hold and make more money or sell and make money. You see how that works? Completely different than going to Las Vegas and playing and hoping you win. The difference with investing is that you get to control your hand. It's amazing. You give me that opportunity and I get to cash in my chips when I'm up. I'm good. Thank you. Thank you very much. That's why my trading record is quite as good as it is. It's just with the condition of the market right now, I just agree with Bob. I don't see a whole lot of upside potential. Okay. Now, what does that mean? Does it mean that I am positioning my portfolio for a catastrophic downturn? No, it's not. If the continued market starts to melt up on me, I'm going to win. I'll make money. I'll make a lot of money. Why? Because I position my capital in such a manner that the invested capital will win. Okay. And the money on the side will remain stagnant. If the market goes down, I'm sitting in a beautiful position to take advantage of the downside and begin to scale in. Okay. But I tend to agree with Bob there. He says he sold the position in ConocoPhillips. I actually reduced some position in oil this week, liquidated position in Chevron, liquidated the remaining position in Marathon Petroleum. uh, was kind of unfortunate because that was an investment holding that I did a lot of research on and I definitely believed in, made good money with it, but had to take it into deep water to make good money on. And I think in the low 50s there with that price to earnings ratio and that dividend, I think that company is very, very poised to benefit from the distillate market. Yeah, the international markets are changing, and I think Marathon Petroleum is going to do quite good. So for you guys that did pick up, but I was really over levered to energy, and it just wasn't a place that I really wanted to be. I still own Royal Dutch Shell, so I do still have that LNG exposure, which is good for me, and then ExxonMobil as well, which is like owning a very, very big bond. To be honest with you, what a boring stock to own! Holy smokes! But they say you'll never lose money with Exxon, or you'll never get rich with Exxon. I don't know. I'm proving that true because I've owned it now for years, and it's paid me a lot of free shares, no doubt. A nice dividend yield, but still down pretty good on the position. Bob Wright says, I'm pretty conservative at my age. So, given some insight there, to do exactly what I'm kind of talking about and emphasizing, does it make sense for somebody who says that to go out and just be dropping huge chunks of capital on this market? You're crazy. You're freaking crazy. Go do something else with your time. Go go to dinner, for Christ's sake. Go do something else. You're not going to force this market to do something that you hope and pray that it's going to do. All right. Do I mean not to invest? Okay. My tip for new investors for tonight, for passive investors that are looking to get involved in the market, is to use scale. This is the most important defensive technique you can use. What I mean by that is if you have $10,000 to invest, and you really want to get things started, go through the preliminary stages of getting familiar with an M1 finance. For example's sake, buy yourself a 10 share position in the S&P 500. Monitor it. All right, that's a $2,700 position. That's no small potatoes, guys. Okay, you're doing a lot of things by doing that. Entering into the S&P 500, you're diversifying the portfolio, you're setting yourself up for dividend uh, reinvestment and dividend payments from the S&P 500. And you're also allowing yourself a strategic investing account, that of which can be funded through dollar cost averaging. Okay. That is what it means to go from a non-investor to an investor. Think about that for a second. But why put it all on the S&P 500 right now? Why? Okay. Now, if you're young enough, it's still same idea, but if you want to be more aggressive, you can do that. If you're set up to have a good job, you can maybe make those rationales, but scale into the market. If it does float down 10%, then maybe you can sift in another 5 shares into the S&P. Maybe it goes down 10, 15, 20, etc. And those are your opportunities to introduce more of a bulk into those S&P 500. You're winning either way. Okay. Now, the question for you, and the rhetorical question, is, do you have the discipline to do that? Okay. We're not in a market right now that's conducive to throwing large chunks of capital at. If you want to, go ahead and do that. If that's your program, no problem. Go ahead. I'm not your dad. I'm just your friend through YouTube. That's it. Okay. But the reason why I walk you through that mental exercise is to give you some insight on how the hell I think about using the stock market for what it's there for. All right. Using it, abuse it, if you will, but don't expect more than what it can deliver to you. Okay. And right now, I don't see it on the upside. So invest accordingly. All right. All right. There's only one stock market. Use it. Observe what it's telling you at the time that it's telling you the data. Okay. Observe it and react upon it. I know there's a lot of folks that are looking to get maybe involved in the market now for their first time. Those are the folks that I really, really worry about. Okay. I'll do the worrying because you're naive. Okay. If you're a new investor and you're looking to get involved and you're fired up because there's 100 YouTube channels now talking about how badass investing is, and this is so incredible, and if you do this, you can quit your job and retire at 22. Good luck with that. Um, I'm telling you what, from a passive perspective in the stock market is not going to deliver those pipe dreams. Okay. It's not. It's not. It's just not. All right. Sorry to be the bearer of bad news. But if you're willing to put the time in to the market, it can really be very rewarding. It really can. But you have to have the discipline to understand what it takes to go through those ebbs and flows in the stock market if you are indeed serious about becoming a participant in the market and you're tired of sitting on the sideline and being a non-investor. If you're tired of that, okay? But you got to be prepared. You're not going to do yourself any good if you don't get the mental aspect right. And I hope everyone does. I know full well that a lot of people won't, and that's the misery of it. But I'll keep engaging the conversation every week at least, and on my frequent upload schedule now to try to push across the point that in investing done correctly is is a lot easier than people think. They just make it more difficult than they think, and the allure of money, unfortunately, provides a lot of opportunity for sharks, certainly, who are trying to sell a program. And there's a lot of susceptible people out there who are willing to buy into that, and they want to believe it beyond any rational explanation of the program that they're getting involved with. They just are looking for that first thing to just say, boom, I'm all in. I'm all in on this program. This is the greatest thing I ever seen. This individual's got 650,000 subscribers on YouTube. This must be legit. There must be people on here getting wealthy and driving Ferraris around. I'm also here to tell you, if you think that the value of a YouTube channel is specific to the subscriber count, this is your wake-up call as well. Okay. Yeah. The value on a YouTube channel is not indicative by the subscriber count. I can tell you that right now. All right. All right. That's real talk for you. I've got my good friend All Good here for sure, is asking a little bit of information about the bond. You guys know I'm about 10% in bonds right now. I enjoy owning it. I've done some research on how bonds affect, how they react over time in the portfolio. It's really interesting to know how much it can reduce the volatility within a portfolio, and it really doesn't change the year over year return over time. It's really quite amazing. A well-balanced portfolio almost performs just as well as an entirely stock portfolio over time. It's actually quite interesting because it really does typically work in a fashion that bonds will perform opposite of stocks. So when stocks are going up, bonds will typically remain static or adjust back a little bit. But when equities go down, you'll see those bonds actually go up. And I was talking about the interesting part about this year is it has not done that. They've actually gone up in tandem, which has been quite interesting. It's been an interesting year to say the least. Very entertaining. I'm working pretty hard right now. When this market does provide me some reprieve and actually goes down, that'll be the time when I'll work really, really hard to set things in motion, and I won't touch them. I won't. And I'll be talking about that philosophy that I'll apply during that time. Whereas right now, I'm just deploying a different strategy in the portfolio. I'm manufacturing profits within AbbVie. For those of you guys that it doesn't stay in the 50s for very long, does it, guys? Right? There was a few comments about AbbVie online, and I think a few folks posted some video on it. But man, it didn't stay there very long. Dividend aristocrat, man, amazing. Goes down to 50s, pays a nice 5-6% dividend. I took it on a swing trade, made killer profit with it, but what a great opportunity to get a long position on AbbVie as well. But it didn't just sit there and yell at you, hey, I'm here, buy me. You got to kind of pay attention. I try to exploit those price movements and at least identify where they are in a particular range when it happens. But Prudential, another great opportunity there. CVS, holy smokes, what a great opportunity there to pick that up. That didn't remain. I think that went sub 50 for just a day, maybe sub 50 for maybe a day. Another very, very good quality company. But anyway, we'll get over here to some of the questions. Right, I'm going to sit on the sidelines until this market makes a move. This pop and drop is getting old. Um, in response to that comment, I would say always position yourself to, excuse me, benefit from the pop and drop, as you put, right? Make sure that you're winning and always become a participant. Don't go from a non-participant to to all of a sudden just trying to time the market. You'll lose doing that. And I know he knows that. And his comment is alluding to something a little bit more smart that I talk about all the time is being prepared to benefit from a downturn. Okay. I think Bob has alluded to it as well. It's not prepared to take a portfolio into a huge downturn, nor does he want to. But I know we've talked before, and I know he's got an interesting perspective on life and especially the stock market. Okay, don't pin all your hopes on the market, guys. You can learn a lot from listening to a guy like this who's sharing a perspective a little bit later in life about how he is entering and how he's viewing the stock market now. Very, very important key points, really good takeaways. And there's a lot of people who will benefit from that, man, for sure. That would serve it better. Christopher Blaine left a comment here. My 6-year-old emptied her piggy bank and asked to invest in Disney yesterday. She now owns one share. It's a start. That's really cool. 6-year-old. That's amazing. Yeah, I think the earlier we can start them, the better. There's a lot of sidetracking, I think, that is going on in between 15 to 25, where there's a lot of value being put on a lot of things, and I don't think investing is one of them. Hopefully, I'm wrong. Hopefully, I'm wrong. I know the majority of my audience isn't in that 18 to 23, 24 category, which is really, that's the millionaire for the picking stage right there. I mean, you just don't know. Most people will float through that stage and they'll forego the biggest opportunity that they've ever had. I got asked on JMax, if you could go back and do what you could do. It's very simple. You'd invest in the S&P 500, and you would defend that like it was your greatest asset, which it is. Buy the S&P 500 and don't touch it. That's the easiest thing you could do. If you were 22 years old out there and you had an extra $500 to start a Roth IRA in M1 Finance and put that in the S&P 500, rock on, man. You're killing it. You put it away and forget it. Don't even download the app, because that's going to be your downfall, because you're going to be watching it and be like, man, I made 12 cents today. This is amazing. I'm going to sell. But anyway, yeah, teach them young. That's really cool. I don't want to ask why Disney, but I know the answer to it. I'm a very proud stock owner in Disney. They're incredible. There's only one Disney on this earth. No doubt they do it well. Yeah, it's an easy company to be invested in. I like companies like that. Apple Computers, Home Depot, JP Morgan Chase, Johnson and Johnson, Pfizer, Merck, some of these big beasts. Tried to catch a falling knife with a United Health Group, but I'm happy to be invested in it. Wells Fargo finally got a CEO, which is nice. They announced that the stock popped a little bit today, 4.5%. I think Wells is doing some good things. They were doing some good things through the scandals as well. They were just doing some very, very bad things as well. I don't think people need 7 accounts. Um, somebody comes in and they just want to open a checking account, and they're leaving with all kinds of accounts and they don't know why. And the teller's getting a kickback on those incentives. They've done away with that hawkish type of targeting of people. Pretty poor performance, to be honest with you. That's a culture issue, no doubt about it. And I think they're cleaning that stuff up. And the new CEO from the Bank of Mellon, I don't know his name, but he'll do good things there at Wells Fargo. That's a very, very good bank. What you don't see about Wells Fargo is really the bulk of their business, and it's large scale accounts. It's not the day-to-day telling. It's not. All right. Good stuff, guys. Yeah, she asked today when she would get paid the big dividend so she can buy candy. Okay, now we're getting crazy. I don't want to see that. I didn't know what a stock was when I was young. That's interesting. That's a really cool insight. I like that. All my parents taught me was debt. Um, yeah, I don't know where I got my financial savvy from. Few key things have helped me along the line. Remember when I was 15, we had a financial planner actually come out to the house and have dinner with us. And I still remember the particulars of that meeting. That's where I was introduced to the rule of 72. And I just like staring at the paper, like, how is this possible? I still to this day haven't really figured it out. But just pretty cool stuff, given the philosophy of owning a mutual fund and having 30 of those companies fail within the fund, and you're not going to lose all your money doing that. Investing does involve risk, of course, but what the power of the 8 and 10 and 12% rate of return per year. I learned all that stuff when I was 15. I was lucky. Started a fire, no doubt about it. Hasn't really stopped since then, but really cool stuff. I didn't know what a stock was when I was young. I mean, I know. I I only had mutual funds, and if you would have told me what I'm telling young kids now about the opportunities with investing for free and having the self-directed Roth and the tax protection, man, God, I would have been dangerous. I would have really enjoyed that information when I was young, but just never got lucky about it. So anyway. Thank you, Ryan and Bob, for your input. Yeah, yeah, all good was hitting me up there about the bond portfolio. I enjoy owning them. It's just another way to make income. They do pay me dividends, and I enjoy taking my money wherever I can get it. To be honest with you, that's the game. That's the game. It's a money game. All right, we be successful at the money game. Christopher Blaine says I'm 20% in my tax protected account, excuse me, non tax protected account, but I have no clue if that is right for this kind of uncertain market. I think that's a good number. You 20% to put you right at about the moderate aggressive risk tolerance. I think it's around 23% is recommended allocation, but kind of depends on the strength of the rest of your stuff. And I think you're sitting good. I think you've got a good program going on. I like the 20%. I like the 80-20 mix. I do. I'm 1080 right now, or 1090 right now. I could go 80-20 for sure and be good with it. Um, but but yeah, I typically float in between that 20 and 10%. That's what I was talking to you guys about my risk tolerance being a little bit more than moderate aggressive to aggressive, but not quite aggressive. Yeah. So, but when I kick it over to aggressive, it pushes me down to 10%. When I drop it down to moderate aggressive, it pushes it up to around 23% or so. Yeah. All right. Good stuff. Oh, good point. Learning from you all so much. Hey, it's great. What else would you be doing on a Friday evening? All good. I tell you what, I just am really kind of humbled at the support, honestly, and the videos. I really appreciate this core group. There's going to be folks that come into the channel that don't know me, okay, maybe don't relate with the style, but for you guys that are supporting the cause, hopefully you're seeing something a little bit more deep about my intention on providing awareness to folks and acknowledging what type of benefit you're getting from that. I think it's important. All right. Bob Wright says this has been a crazy year. I agree. It's been pretty wild. I don't quite have this one figured out this year. This has been interesting. I've done well. I've outpaced the market. Whoop-de-doo. I've worked very hard to do so. Might have just been better just taking the S&P returns and living to fight another day, to be honest with you. I contend that that's probably the best way no matter what, because the level of risk that I've had to take on to outpace was probably not justified when compared to just taking a position in the passive markets, right? But it's been interesting. It really has. It's been interesting introducing the new Democratic nominees, knowing that we've got an election around the corner. I think people are just on edge. I do. With China going on, I mean, the discussions today, did you guys see that with the Chinese equities proposed to be pulled from the New York Stock Exchange? Yeah. You wonder why Alibaba lost $10 today. I'm glad to be out of those. Yeah. Yeah. Yeah, I feel bad for those folks that bought Alibaba. It's a great company, great valuation. But yeah, you get headline news like that, and it dropped them all. Baidu, JD, all of the big companies from China got dropped today. Pretty good. Ryan's a fine teacher. Awesome. I appreciate that. As long as the student is benefiting from the information. This is a little bit different. Okay. I'm not teaching you about philosophy. I'm not teaching you about psychology. We're talking about financial stewardship. All right. Financial stewardship is an ever evolving thing. It's one of those things that you can never, ever master. Never, never. And if you just understand that and understand that maybe you, as a starting investor or an investor that is walking a road, will continue to evolve over your life, I'm okay with that. I really am. It's those folks that never want to walk the road that I feel bad for. I do. I really wish we could motivate everybody, but again, I know that's not realistic. But for those folks that are seeking out that motivation, and I know that they're out there as well, they'll benefit from the information, no doubt about it. And they'll justify it for themselves. They'll understand why the information makes sense. We provide all those tools on the channel, and I don't get into that much on the live stream. I have a little bit more fun on the stream, but those products are readily available through the channel. Most definitely. Mr. Andrew Ryan says, have you ever owned AVGO? So that's Avago, Broadcom. The two companies came together a couple years ago anyway, and or Qualcomm. I've owned both of them, both really just solid dividend payers, excellent chip makers. My response is right below there. You guys are willing to review. I did throw AMD and NVIDIA. AMD technically looks pretty good here. On the charts. I picked that up on some technical analysis that I did. AMD is a direct competitor to Intel. I'm pretty certain I have an AMD processor in my new Apple iMac I just bought. This is the 2019 I'm doing this live stream on, but I'm long Intel. Okay, so the portfolio is a little bit more poised to own Intel, a little bit more value oriented in that portfolio that I stuck Intel in. And I'm good with that. But never owned AMD. Interesting. Never owned NVIDIA. And I think NVIDIA is probably the cream of the crop, to be honest with you, the most exciting of them. But the true dividend payers are the ones that you identified there. I think they're both excellent companies. Excellent. I really think you can win. Don't get too levered in the chips, please. It's not worth it to do that. Put it as a supplement to your technologies holdings, and be okay with that. Okay, I wouldn't put a bulk of your holdings into an Avago or a Qualcomm. You could put a smaller portion of them in there and appreciate and get that dividend appreciation that I assume you're looking for. Mr. Jared Odell is down below. It's awesome, man. Good to see you. Just appreciate you. Yeah, we need to meet someday, no doubt. I'd like to meet Mr. Odell, no doubt about it. Just a sharp fella. Love his perspectives on investing. Love it. Just down to earth, and it's cool. It's fun because investing brings out a lot of different opinions, and no two opinions or strategies are the same. So you get to hear folks like Jared and Adolfo in the group for sure. Adolfo's another great friend I don't talk about enough. I just don't. Those guys basically run the Facebook group for me, no doubt about it. Probably give them a chunk of the channel someday. What the hell? I'm crazy. I am. And I don't forget good work. I don't. I acknowledge it. Ernest is the ambassador of the group as well. And Raymond Lee, no doubt about it. Raymond's one of the sharpest people that I've ever had the pleasure of reviewing content. Some scary smart folks, guys. I'm not one of the scary smart folks. I just can grind and I can work really, really hard. And I do acknowledge my strengths is acknowledging what I don't know. Not necessarily come on and portray that I know it all. That's just not the truth. And I'm more interested in the truth than fairy tale. All right, good stuff. I like Avago for its dividend. That's what I said. I'm long Nvidia. That's interesting. being long Nvidia right now, a little more growth for sure. It's a great company. He says it there. But Avago is the um, one I own to get some good dividend income. That'll do it simultaneously. Have exposure to a great high growth name. Right on. Yeah, it's big and it's growing. So Brent's right below. And I've got Corman Vax below who leaves a comment here in the group. For the first time in 3 years, I've sold stocks. Wow, this week and currently sitting on 50% cash. No declaration there. I would assume if that's the first time in 3 years, you're sitting on some fat profit, no doubt. You just, unless you've taken some stuff into some deep water and had some unfortunate trades or investments there. But I don't know, man. I just think there's some real value in that comment. I really do. I thank you for sharing it because I don't know if today's investing style or investing landscape requires us to be a little bit more dynamic. Okay. And I know that goes against some contrary methods of investing, just invest and forget it. And I do contend that a certain portion of the portfolio should be that. Okay. I think the scarier question to ask is, does it all need to be like that? All right. Do we have a little bit of latitude to seek out a little bit more of a strategic advantage and try to accelerate some profits going forward? I contend that we do. Again, I could declare all the trades from this year for 2019, and I hate to toot my own horn, but there's a lot of green there. All right. 5 or 6 unfortunate red trades, and I don't beat myself up over that stuff. That's just the nature of the game. I can't expect to step to the plate and bat 1,000. No, not in the investing game. Now, if I was hitting 300 in baseball, that's good. In stock investing, I would stop. Yeah, yeah. I'm probably around 85% of my trades are positive. I'm waiting for somebody to hit me up and be like, "Wow, Ryan, that's pretty impressive." Yeah, it is. I'm just not afraid to take profits, man. I can have a couple percent in a stock and take profits. I don't lose sleep over it. I don't. It's a money game for me, and quite frankly, I never have and I never will trust the stock market. Again, it's a tool to be utilized. It provides me that exposure. It is what it is. It allows me to participate in good growth companies. It allows me to participate in good dividend companies. It allows me to participate from a passive perspective. It allows me to participate in some bond passive protect right. It allows me to accelerate growth. All right. All things that if I was a non-investor, I don't know what we'd talk about, guys. I don't know. Investing just fun to talk about, no doubt. Hey, this is about the most people that have ever made their way into the group. I'm looking at the group count. I've never broke 100, but there's a lot in here. We've broken 80, and I've done that a few times, but not very much. There's a pretty good, robust group. Thank you. Thank you for coming in and supporting. That's pretty awesome. I really appreciate you guys coming on and spending just a few moments. I understand everybody doesn't come on and stay with me for the whole 2 hours. If I could just drop in for 5 minutes and spend 5 minutes on the live stream and then kick off, that'd be cool too. But then again, I think that could be problematic for the live stream, so I don't do that. But pretty awesome. Thanks for you guys kicking on and showing some support. If you want to hit the thumbs up, do it. I'll take that level of support, but I'm on y'all's time. Okay. And I value that. I'm not here to waste your time. Here to provide as much value as I possibly can on a topic that I freaking love, because it has the opportunity to really, really affect people. It really does. It tears my heart out sometimes to hear people talk about their number one regret in later life, and this is it. This is it. All right. And if we were going to strike at a fundamental problem that we don't talk about very often, and I allude to this sometimes. I do. Okay. We're all going to live and we're all enjoying this community. All right. And you're all part of it. Okay. But life is fickle. You get one shot at it. Okay. This I've already said it in the stream. This is not a topic that you're just going to get in and you're going to learn and be a master at, and it's going to make you a millionaire. Okay. It doesn't work that way. However, if there's room for improvement for you, let's go to work. Let's go to work. You'll be glad you did. All right. This is your wake up call. All right. If you guys can tell me what movie that's from, I'll give you some extra credit. One of my favorites. It's awesome. I'd like to know what beach he's sitting on when he says that, actually. It's probably somewhere down on Long Island for sure. But anyway, if you can name the movie, man, I'll hear you out. Give you some credit. Give you a free 15-minute session with me. Anyway, yeah, the one and only Doug Whitaker, man, awesome. And one of the new Christian I talked to, that was good talk earlier. You're welcome for that call. I was glad to do it. Doug is in the house. Everybody knows when Doug's in the house for sure. And JMac Investing, certainly the owner of the coolest thumbnail ever in the history of thumbnails. Pretty awesome. Every time I look at that thumbnail, I just see a beard jumping out at me. You know what I'm saying? I'm just like, damn it, Jason, he's in the house, man. But JMac Investing is in the house for sure. And then Brent right below. Woot woot. Been away from YouTube. Really? Wow. Yeah, I wish I could say the same, but not so much. You guys know I've been putting some serious content online. Happy to do it. K97, what happens if you own some of these Chinese companies and they try and delist them? I didn't know you asked that question, K9. And before I address that question, I would like to thank K97. I own K97 a thank you, because K97 provided the best referral that I've ever had through YouTube, no doubt about it, and I thank you for that. I don't know what it is about. There's a few people that there's a few things that I look for in a channel creator, and most the featured channels that I have, they have that little thing that I look for. Joe Carlson has that and a lot more. And K9 was the one that provided me the recommendation to kick over. And I've thoroughly enjoyed that recommendation. I think he knew that I would. I think there's some real impact there. Joe's got about 36,000 subscribers, I think. He'll be at 100, no doubt about it. And he's one of those canaries that I hope really make it on YouTube, because it'll prove my theory a little bit wrong, in that you just have to be charismatic, and just scare people into subscribing to your stuff. Nah, he doesn't do that. He's like very, very calm and methodical, and just talks through a 30-minute video, and it's like knowledge. Here you go. Here it is. Here's a news article. Here's another news article. Here's another news article that backs up my point. Very, very cool stuff, man. Very cool. And I look forward to that coverage video I'm going to do for him. But anyway, what happens for you? So I don't know. I mean, if today was indicative of what's going to happen, I sold Alibaba at 180 something or other. It's going to get even more attractive for me if it's not attractive right here to go ahead and buy. I don't know. That's weird. Today was the first day. I didn't even know they could do that. Evidently they can. Stock market, baby. It's a wild, wild world. It's interesting. And when they said that, man, they all went down. Alibaba dropped 10 bits today, and I'm not really sure. I wouldn't buy it here. Jesus, just take what the market's giving you, for crying out loud. If Alibaba can fit in the portfolio, or Baidu can fit in the portfolio, that's one thing. But man alive, I would be careful. I'm interested. I sold at the right time. I took my profit out of Baidu and Alibaba, both. Made some good profit with JD.com. I've invested in all of them this year on swings. I could probably check and tell you how many entries I've had to each of them. Alibaba, I've owned 10 times this year, at least. Channeled it every time, made money with Alibaba every single time. I think eventually it will be up over 200. But the question is, how far do you want to try to catch this thing, and how far does it have a potential to go down if it actually happens? I don't put anything past this administration. Hell, they may do it. Who would have said that we would have just been in a full-blown a trade war and the stock market would still be continuing to go up, right? I mean, we are in a trade war. We are in a war. And even though my personal beliefs about that are my own and they're personal and I actually support it, I do. There's no way you could have told me that the market wouldn't have got cranky with a trade war going on. And look at the strength. It's just very impressive. I wouldn't touch it. I wouldn't. There's so much more better quality out there on the horizon. I think some stuff is getting, Fang is really getting whacked. I don't own any of it right now, which is good. I've made a lot of money with Fang this year and in years past as well. You guys know, I'm glad I'm not in Facebook right now. Sometimes you get it right, sometimes you get it wrong. I could just as easily be in Facebook. I think it's a phenomenal business. I just think it's got pressure now. Now it's got headwind. And why buy into a stock with headwind when you can just wait and see and monitor it? Okay, be a student of the game. All right, don't think that you have to jump on every opportunity that comes up. There's nothing wrong with monitoring it. If it boosts up to 200 just because, and you were on the sideline and monitoring that information for next time can be data logged upstairs and say, that might have been a small opportunity missed a little bit. No big deal, right? Okay. Be constructively critical about the decisions that you monitor, the positions that you do take that work out, and the positions that you do take that don't work out. Okay. Be constructively evolving. Remember, don't enter into a bad trade and be like, fuck, I'm done. I'm out. What the hell good is that going to do? Calm down. You're a human being. You're going to make mistakes. It's all right. Okay. Move on. In the stock market, you need to have a very, very short memory. Short. Okay. Mechanical. It's not emotional. Stock market investing is so unnatural. It's not even funny. It is. It's weird. It's why a lot of people can't relate to it. But it's very rewarding if you want it to be. Pay a little bit of attention, and you can work it out. Certainly, it's it's one of the most rewarding things that I've identified in this world. I think real estate certainly, but I'm trying to leverage the community. I know Jason on his live stream had Ryan on his live stream, and I don't know if he's going to pop in. I haven't seen his icon yet, but I was going to give him a shout out on the live stream. But he mentioned investing in real estate as being his number one gig, and that's awesome because I think real estate is right up there competitive with the stock market as far as potential. Yeah. And real estate's next for me. No doubt about it. That'll be the next rollout. And one of the funny things about me and YouTube is I take a lot of value in these relationships that I make over the community. I look at my community as just that. It's not something that I want to leverage and take advantage of. I want to understand where you're coming from, and maybe we can put something together special down the line, because there's no way in hell I could meet all of you guys through normal means. So this is a way for me to understand where you're coming from and maybe where I'm coming from, and maybe put something together. Again, the Independent Investor channel is going to be on YouTube for indefinitely. It's part of my life, no doubt about it, as you guys are as well. And I hope you look at it the same way. I'd like to really, if you don't mind, part of my payment is to monitor your success. That's it. Okay. So as you walk the road and you evolve in your successful application of the program that you've deployed for yourself, I will take great satisfaction in your success. So it's yours. And that's reassuring now on any social media, on television especially. And if you're one of those folks that join the community and that you think you're part of something special because you're kind of tired of sitting on the couch sometimes and watching the TV world, and they're always in their own world, self-promotion, right? How far can you go pushing out whatever propaganda you want? The cool thing about the Independent Investor channel and the opportunity is that this is about building your business, man. I look at investing as being that it is your small business. You don't necessarily have to have the storefront anymore. You can invest in yourself through the stock market and you can build your net worth. Money's money, whether or not you're making product from selling a product off of the shelf or you're making capital appreciation. What in the hell is the difference? I could care less as long as it's going into my freaking pocket and as long as your investments for the risk that you're taking are going into yours. All right. Good stuff. Financial investor had a video recorded for Monday to release. Then we had our kiddo on Monday. Oh man, congrats, bro. That's awesome. That's the first I saw that. I didn't see any photos at all. That's rocking. That's pretty big devotion to YouTube. But don't make your wife mad, okay? You got obligation there, okay? And trust me, I can tell you I've been through it. Okay. I know what's up. Got to have your priorities, man. Congrats to you, man. That is rocking. Good stuff. Everybody's congratulating. I just got down to the thread, so I wasn't ignoring you, brother. I certainly wasn't. Congratulations. That's so cool. So cool. That's a magic moment right there, man. Good stuff. That was a good collaboration. Larry Massa said, I don't know if he's referring to ours. I think so. Thanks for doing it. Yeah, it was fun. It was no problem. It was a good time, and I think we talked about some cool, unique stuff. Yeah, I think people respond to that. I do. I like that personal. That was the advice I gave to Scribner. Actually, I said, make sure people know who you are. Because he's good, man. He's good people, and that's really the reason why I watched him. I didn't watch him for his investing knowledge, and I hope he doesn't get mad at me. He doesn't watch my live stream anyway, but if he does, um, there's a little bit deeper, genuine reason why I watch the guy. I just think he's a good guy, and that's good enough for me. All of his success that he's had and growing the channel, I'm all about that. I think eventually he will be a million subscriber YouTube channel. There's no doubt in my mind. But yeah, I think there's something special there about those opportunities. But it was fun, man. I had a good time. So hopefully I don't get dumped on here. If I do, man, I'm gonna have to go up and find the spot again. But I've got Benjamin Gascone. Love you channel. New investor here. Looking for all the guidance I can get with the current market out there. What about trading Forex when the market goes this way? I'm not the one to comment on that. Okay. I am absolutely 100% not in the Bitcoin game and I'm not in the Forex game. And quite frankly, I'm not in the options game, which the options really would come before either one of those two opportunities. There's some really good content about Forex out there. Just be very, very careful. If you're interested in Forex, I would say to put that on the back burner until you get some investment uh, assets under your belt for a while. Identify, do some research on the appropriate entry conduit. What I mean by that is your account. If you've already done some preliminary research, I congratulate you on doing so. I typically put the accounts into two separate categories. You got your major brokers, some of the examples of TD Ameritrade. You've got Fidelity, which is a very, very big crowd favorite. Okay, I'm giving you the consensus from the group. So this just isn't me. All right, this is a consensus that I get from the group. Charles Schwab, Chase, Ally Finance. I personally go with Merrill, which is a Bank of America company. They're very good on the major brokerage side of the house. Now, if you're a new investor, to be on the front side of the wave with seeking opportunity, the market with either M1 Finance, Robinhood, or First Trade Financial, Robinhood is a distant third for me, and it's typically not one that I recommend through the channel, but I'm trying to be thorough for you and give you the opportunity to do your own research, right? So Robinhood, M1 Finance, which is probably a crowd favorite, to be honest with you. I like them. I like First Trade a lot, but I contend, and I don't think anybody listens to me, but I'm going to say it again. M1 Finance is really, really good for a passive investor. Uh, if you want to put it away and forget it, M1 Finance can work for you really, really well. If you want to put a single stock in there, build a dividend portfolio and leave it in there, you see the common theme. passive, guys. Okay. Don't look don't look at M1 Finance if you want anything other than a passive strategy. Okay. First trade works a little bit different. You can definitely the trading opportunity there. Both of those are free of charge. Those are more of the discount brokers that I talk about that offer really strategic products. M1 is being very aggressive with the products that they're rolling out now. But identify an account that you're satisfied with. Okay, whether or not you've got the opportunity to go with more of a major brokerage house. If the entry and exit fees aren't a big deal for you, you could go that route. But if you're looking to save on the entry and exit, I would look toward a discount broker like an M1 Finance. I think that'll help you get zoned in on on the account that you choose. And once you establish that, hell, I mean, you could have that done by early next week. That costs you nothing. You know, nobody's holding your arm behind your back and saying you have to invest. You have this is going to cost you money to start this account. No, it's free. It's the easiest thing somebody could do to enter into the investing world as a non-investor. Then you can start the account and start to utilize all the tools on the platform. Start to get yourself familiar with what they offer, and that way you can make the best decision for yourself about defining your investing style, which it sounds like you're still researching on. So I wouldn't want to comment on the Forex, and I don't comment very often on Bitcoin. I think Bitcoin is awesome. I think it's awesome. As an investment, I think it's horrible. So I'm really into it. It's great. It's extremely risky. Um, for the right risk profile, Bitcoin is the right investment. Okay. But for me, that's not for me. Okay. I'm not buying a Bitcoin for $10,000 only to see it cut in half. That's silly. And the prospects of that happening are quite good. The prospects of it doubling and go to 20 are maybe just as good. I don't know. But that is a volatile investment. There's no way. I've worked very hard for the 18,000 of profit I've made this year, just of realized profit within the accounts. I'm not going to subject that to one Bitcoin, for the hopes of doing what, doubling it to 10. With in due time, I'll make that money anyway, and I'll make it with a hell of a lot less risk. All right. But I don't want to talk too much about specific products with you, but if you're a new investor, stick with the channel. Welcome. I typically spend a little bit more time for somebody who comes on and says, I'm a new investor. That's awesome. You need to understand this is just my niche, mine. Okay. My niche is very simple. If you say you love the channel, I would love for you to tell me why. I'm going to tell you why you should love my channel. Here goes. Most people don't know about the prospects of self-directed investing. Most people have heard about a Roth IRA. A Roth IRA under a managed program will provide you the same tax protection that it will provide you in a self-directed Roth IRA. The difference is that self-directed Roth IRA, for example, the M1 Finance account that I threw out there that I said you should look at, that account is free of any type of charges on the account. What the financial industry has done is they've taken traditional services, okay, and they found a way to attach fees on those. For example, if I were to take $100 a month and put my money into a managed situation, they would charge me 5.75% on each one of those investments that I put my money into every single month, month in, month out, year in, and year out. The secret is that over time, that extremely hampers the money's ability to grow. I call it a restricted growth, and it prohibits the money's ability to grow unobstructed in that account. So the secret is such to get involved in either a discount broker like M1 or a major broker where you don't mind paying the entry and exit fees. Really, I'm less concerned with those, and I'm more concerned with the hidden fees specifically. I'll work backwards. Hidden fees, number one. Number two, annual fees. What a garbage. I'm not going to pay $100 to own a Roth IRA. It's ridiculous. It's a thing of the past. They should do away with it, and there should be a law that prohibits it. Okay. Annual fees, gone. Dollar cost average fees gone. The 5.75 basis points. That so if they sell me 4 mutual funds to invest in, they're taking 5.75 basis points off of each of those $25 blocks that I invest into each of those mutual funds. Gone. Okay. Dollar cost averaging, that's the 5.75% fee. Dividend reinvestment. They've actually found a way to charge investors for the dividend reinvestment fee. It's insane. It's like modern day highway robbery for sure within the account. If you can take all those fees and drop them all. Okay. Drop them. Industry average is around 3%. Okay. Now that's not even including the fees that you would potentially pay if you were sold mutual funds. Okay. Mutual funds, about 1 basis point up to 1.5 okay, of expense ratio within those. So think about it. They've now taken your tax protected benefit and they found a way to attach a fee here and a fee here and a fee over here and a fee in here and a fee over here, right? That they're making your account sick. It's sick. Okay. Independent Investor Channel provides the medicine to free yourself of all those little restrictions. You guys ever seen Alien? Yeah, it's like that. It's like a bunch of aliens attached to your account. Okay. Drop them. You don't need them. You do away with them and you come over here and you clean up the account and you put passive assets in there and you put passive stocks, no fee for stock. Okay. Into the account. You need to understand that very thing. Understand those two avenues. And then you're stepping into a much grander world. That's about as the best I can put the intro to you. And I hope we found you. I really do, Benjamin. I really do. Welcome to the channel. I could spend all night talking to new investors, and you're typically the target audience. If you're coming in and you're brave enough to say, "Hey, man, I'm here and I'm a new investor. Can you help me?" Hell, yes, we can help you. And I'm pretty aggressive on doing just that. So welcome to the channel, man. Awesome. All right. I will cut into your sleep time. It will cut into your sleep. Oh yeah. Yeah. Hey, come on. Don't ruin it for him. It's all good. I've got Sean here, Satterfield in the group here. He's got a heck of a thumbnail. Interesting enough. I wonder what he does for a living. That's pretty awesome. I'm glad you kick in, help us here on the Independent Investor Channel. That's great. If you have a question for me, throw it my way. That's the way I roll here. 66 live streams. I don't know if there's anybody else setting this kind of precedence. I know JMac is he's trying to tango with the big dog, but he's got to log some time there for sure. He's probably laughing too. It's amazing how much more energy I have with coffee instead of my other drink of choice, apple juice. Yeah, this is awesome. Maybe we'll go 3 hours tonight. What the hell? Anyway, what's up, everybody? So K97, Joe Carlson, and PPC Ian. Yeah, PPC Ian's really, really great too. Those two are just really, really quality channels. Different. Joe Carlson, a little more psychological. At PPC Ian, a little bit more technical. I think. In all fairness, I think they're great. I think they're doing so good on YouTube, and they're doing what I would hope a good big channel would do, and that's define the landscape with some integrity. And both those guys are doing really good. PPC Ian, I need to spend more time reviewing his content because I know the content is very, very good. I just don't have a lot of time to review a lot of content, and I find myself really wanting to watch Joe's stuff, and I find myself wanting to do so, and I still might not have the time to get to it. That's how busy I feel like I am. I just got to make the time to make the time, but that's just what it is. So pelt work, I'm back down to where I started a month ago. I don't know if you're talking about your investing. I'd like to know the relativity of that. The example that I put toward the front of the live stream, I wasn't alluding to anybody in particular, but I do make that point to say, look, if you've invested for 1 month, You're all right. You okay. This is not going to be the first time, and it will not be the last time. Trust me. If you think it can't happen in the investing world, you need to gain a little bit more experience. You do, because when you don't think it'll happen, it will freaking happen. When you hope that it won't happen, it will happen. When you think that it will happen, it won't happen. Okay, I can continue and continue and continue, but you get the theme here, right? The investing world never ceases to surprise. Don't think that you can invest, and because you're invested, it's automatically going to do what it is that you think it's going to do, because it's probably going to do the opposite. All right. The trick is, what are you going to do? Be a counterpuncher. Be a counterpuncher in the market. Okay. When the market does this, you do this. Okay. Think about what you're going to do if the market does that. That's some insight on how to corral the market and say, okay, market. All right. Ryan's saying that the market can do anything. And I don't know why anybody would ever mess with the market if that's what it does, if it's so unpredictable. Well, that's not necessarily true. And that's not necessarily what I said. I just think you'll be more beneficial to prepare yourself to at least deal with a lot of different anticipated outcomes from the market. For example, it's going to go up or it's going to go down. All right. That's a good place to start. All right. And most people put all their coattails on it going up, and then they get pissed off when it goes down, and they want to come back to the independent investor channel and they want to start throwing tomatoes at me. Pah, pah. Investing is the worst thing ever. This is terrible. I've been investing for 5 weeks and I'm down like $8. You think I'm joking? I'm not. We've got to get a little bit tougher. And if you can't toughen up, if you can't acknowledge that it is an evolution, it's not as if you jump out of an airplane and you skydive on your mark and you're automatically on this island of fame and fortune. It doesn't work that way. You are in a desert to start. You know nothing. And I'm just trying to put you on a little bit of a path toward an oasis, okay? Trying to put you on a little bit of defined success. All right. And so by starting on your evolution, working on your terminology, working on your vocabulary, what the hell is a stock? What does it mean to be a stock owner? What does it mean? I'm throwing advanced terms at you, like most people understand the Roth IRA, but very few understand the prospects of self-directed investing. Why? It's because it's not advertised. It's not. Okay. That's why you've got folks like me. And a lot of folks are advertising for self-directed investing and they don't know that they are. Brent is one of them, financial investor. JMac Investing is another one. All right. Lydia Santiago, all of my featured channels, Joe Carlson, they're all self-directed investors. They all just deploy the techniques in a little bit different way. And I'm not sure if they put the level of acknowledgement that I put on the importance of avoiding fees. Okay. That's the key. That is really the key. If you can put a lot of the acknowledgement on your investing success, on your ability to justify your self-connected, your individual connection to the stock market without a middleman, you're winning the battle. You really are. And I'm not saying that part of your portfolio can't have some representation, but please understand the impacts, okay? Because they're really elegant about telling you how incredible of an advantage they're going to provide to you as a service. Bullshit. It is. It's insane to offer that. The irony in the two paths is so staunch and obvious to me. It's crazy, because over here you have the passive route and the single stock route. Single stock's not for everybody, but ETFs could be. All right. But why in the hell would a financial planner sit across from you and build you a portfolio of ETFs? Why? Answer that question for yourself. You'll understand so much more about why mutual funds are the product of choice over here, and why there's incentives for offering certain mutual funds offered by certain product offerers. Okay. Look into it, man. It's very real. I would just rather avoid all that bullshit, to be honest with you. Okay. There's a lot of people in my group who feel the exact same way. All right. Cool. All right, I started a small. There's the dump. There's the data dump. I just saw Adriana Aristobal pop in here. I like your T-shirt. Thank you so much. I appreciate it. There's been a ton of people that's been buying it. I'm just kidding. That's all right. I didn't make it for that reason. I bought it so I could actually wear it on the channel, so I wouldn't have to continue to wear the same shirt over and over again. I'm not a big. I don't really like buying clothes. I think it's about the worst investment you can ever make, the biggest depreciating asset that you could ever buy. I know there's YouTube videos out there talking about appearance. I made fun of one of them in one of my chronicles because I'll fight that tooth and nail. I really will. I think appearance doesn't have anything to do with your financial savvy, and it's funny. It's crazy. Yeah, just have it upstairs. That's good enough. You don't have to have it in your tie. All right. Let me try to cruise up here and find my spot again since wow, face suckers. Awesome. That's cool. Let me try to cruise up here into the 529. Holy smokes. I see some new folks here that I'd like to address. So let me try to go up here and find my spot where it kicked in. Mutual funds can have high fees and underperform. Good to have a few in a mix still. Wellington are the oldest, been around since 1920. I should probably, I've got Kenneth Noga comment here. It's a good one. In all fairness, I probably should spend a little bit more time in researching. I know Dave Ramsey does a great job of promoting his mutual funds. I would contend that somebody somewhere, somehow, himself included, get a kickback on those endorsements. So my question is the individual investor in mind when those recommendations are being made? I'll leave that answer up to y'all. All right, because what you said about in your first sentence, mutual funds can have high fees, and they do, and underperform. They do. They do. So check into the statistics on that. It'll be a game changer for you. It's amazing. Thank you for your comment. That's awesome. But I should do more diligence. I'd like to have a little bit more of an understanding of what those top tier mutual funds are for people, because I know there's a lot of people out there that still prefer to invest in them. They are drastically different than the index. They like to have that representation and seek out that opportunity for an higher than average return. I would like to have a nice listing of them. And in all fairness to myself and the community, I really don't put the work into mutual funds. I don't. I put the bulk of my work into single stock and ETF products. So we've been going an hour and a half. It honestly seems like I've been on here for 5 minutes. Is the clock wrong? Wow. Anyway, let me cruise up here and see. I've got Obstinate One in the group. If you're buying a stock right now in this inflated market, it is inflated. You see some weird buying going on in some stocks that would never hold water in a bear market. Never. In a bear market, everything gets criticized, very critically scanned over. In the bull market, it's the opposite of that. Every single stock gets the nod. Every single stock gets the justification on why it should be bought. And I agree with that. Your particular stock has an enormous margin of safety. No high PE growth names. Nice. I think you responded to somebody up here. Let me see if I can't find my Marathon going to 70 a share. Oh yeah, for sure. JG. I agree with that. Valuation's just way too light. Very oversold. Holy smokes, man. I should have swung it for sure. I should have taken a bigger position. I had 100 shares. I took it into the upper 50s, liquidated 40. I had 80 shares, 80 and change. Liquidated 40, and then just this week liquidated the rest because of my exposure to oil, not so much because of my individual position in Marathon Petroleum. Phenomenal company, no doubt. I agree with you. I think it's going to 70. I think it's going to 100, be honest with you. So Obstinate One says Kroger. See, now I've got Lydia Santiago in the group, and you know what? I'm just going to start calling her out at the start of the live stream because I always, in fairness, wait, and I know she gets off of work late. So I'm just going to start calling her out every single Friday. So Lydia, live stream 67 is yours. Okay. Tell you what, you still owe me a live stream. Now I know how to do it. We can do a collaboration. That might be kind of fun to get on and talk. That might be really fun. The East Coast and the West Coast collide. Huh? It'll be great. It'll be a battle of titans, investor minds coming together. No, I'm just kidding. I think it'd be a fun discussion, to be honest with you. So, Lydia's been with me for now probably a year anyway, I think. So, really good stuff. Incorporating investing how she sees fit. I think that's a beautiful thing. I really do. Welcome to Lydia. Lydia's another channel creator as well. Always want to try to call those folks out if I see them pop in here. So, man, there's a ton of comments. God, I hate when this happens. I wish these comments were at the beginning of the live stream, because I would spend a majority of my time getting to these. But it's amazing how this thread is enormous. So I'm going to try to manage this the best I can. I'm going to try to cherry pick some stuff. If I've got some folks here that are really asking for some help, I know you guys are conversing amongst yourself here as well. Wow. Okay. All right. Let's start the work down here. With the bank bailouts occurring now and the political turmoil that never ends and the market drastically in a bubble, how are we not on the verge of a biblically bad market crash? Yeah, I I don't know. It's been a very, very confusing year this year. It really is. I think debt, in one word, is my that's my major concern. I really do. Really getting called on the devaluing of the currency by running up free debt right now, corporate debt, um, and and the national debt. That's my biggest concern right now, to be honest with you. But I don't have an answer for you, other than I will tell you what I've done, and that's prepare accordingly. You don't have to have all of your hard-earned money tied up in the stock market. As a matter of fact, I've had some folks now just tonight declare to me that they really don't, and they don't feel comfortable doing so. Right on. I think a lot of people may have benefited from that posture in 2008, 2009. I think a lot of people would have benefited from that posture in 2001, right? During the dot-com bubble. But I think the idea is that you seek out the amount of exposure that you're comfortable with now. That's always the key. It's always the key. And for me, with a market at an all-time high, I don't think it should ever be 100%. I'll just throw it out there and just throw it out there. All right. If people want to disagree with me, they can. I don't trust the stock market to just do what it is that I expect it to do. I've been proven right on this many, many times, guys, many times. And for those folks that are on YouTube that have fully exposed portfolios, and I know for a freaking fact they don't have but $500 in their savings account, they're going to get crushed. Crushed. We can talk until we're blue in the face to try to help them, but they already know it all. Why don't I hear a lot of investor people talking about Schwab? I just did. I talked about it at the top of the live stream. Schwab is one of those brokers that I can't speak about personally, because I've never experienced it. But most of the folks that come in and provide me with that secondary referral allows me the opportunity to convey to my community that people are very, very happy with Schwab. Absolutely, probably top five. Whereas Vanguard doesn't even fall in the top 10 for me, but Schwab does. Schwab, Merrill, Fidelity, TD Ameritrade, E-Trade. I'm not so sure about E-Trade. You could probably pick, kind of a wild card for that other, but it's a top five broker, no doubt about it. Maybe Chase, right? Been some positives come back to me on Chase. That's in the major brokerage house category. But thank you for offering. That's good stuff. Still mad at myself for not adding to my Caterpillar position in the 110s. Still holding what I have, though, probably going to hold Caterpillar for 25 years. That's my plan. I wanted to own Caterpillar for a long time, and I could come back to you and say, I wish I would have bought Caterpillar when it was at $56 a share, because that's when I started looking at it. And it ran up very, very quickly, and I didn't invest in this last downturn. I did. I finally got my industrial exposure to Caterpillar. I really like Cat. I really like John Deere as well. John Deere is one of my favorites. I put them on that same pedestal with Caterpillar. Very well run company. I wouldn't throw them out in the cold, shivering, hungry. I'd give John Deere some food. You betcha. You'll have a chance to get Caterpillar or whatever other stock want a drastically reduced price when this market takes a haircut of 50% by 2021. Yeah, I, I, okay, maybe it happens, maybe it doesn't. Um, I think we're in for something interesting, no doubt about it. Again, prepare accordingly. All right, it's going to be a rude awakening for a lot of people, man, that are overexposed to the stock market. All right. Don't be overexposed. Okay. I feel it depends on the presidency. Yeah, yeah, I think so. I think so. I'll let you read into that. All right. We might not see a big 30 to 60% cut till 2023. Maybe. Um, all the economists right now really aren't calling for any type of recession in the short term. So, again, now is the time to be having these discussions. That's why I do this live stream. Warren, unfortunately, is the next president. Oh, unfortunately, is the next president. Wow. Um, I'll leave that one alone too. Wow. 50% seems drastic. It could be. That's gosh, all the good comments are down here at the bottom. I should have flopped this around and done this at the beginning. There's some good stuff down here. Andrew, it's coming sooner than later. Okay. Spencer Gordon's in the group. Benjamin Gascon. Yes, you are. Okay. That's likely correct. But like I said, it's been said for a while. Yeah. Don't forget to create your individual pie. He's keeping me honest, K97. I've got Ruth in the group. I come on quite often and you don't comment, but I learned so much from you, Ryan. Awesome. So you don't comment. Yeah, okay. I think there's a lot of folks that come on that don't really feel comfortable commenting. I'm not sure if I go on a comment just to let folks know I'm in there, and if they want to hit me up with questions when I go on other live streams. But really, really glad to see you on here, and hopefully we're providing some value. I'm just a 42-year-old fella. That's it. Just another fella that comes on and shares this small aspect of my life. Um, Investing is something that I've sharpened, so it doesn't have to be such a large part of my life. And I've got it streamlined to where when I engage in my investing evolution, I mean, I was just watching some videos last night, educating myself on technical analysis, and it's just an interest of mine. Definitely, it's a craft, it's an art, it really is. And I hope folks get a little bit more excited about it. I think there's a lot of people out there um, that are not interested in it, that may have a little seed in them, and they've got a little bit of potential to really like this stuff. It can be a lot of fun. It can be really rewarding, um, and it can be humbling, but it can be very exciting. Really can. Investing is a lot of fun and it's very exciting. And thank you so much for leaving a comment and letting me know you're there. Kind of cool. But welcome to you. Let us know if you need anything. Certainly, hopefully, I try to be as open as I can with pushing the stuff out to keep the questions to a to a minimum if I can, because I'm very busy. I really am. Warren is not going to get Wall Street or votes. Yeah, that was that was just this week. That was news Bob Wright is talking about. So I'm sipping a White Claw right on, man. Wish I could have one. Warren is the next president. All right, now you're trolling. Obstinate ones trying to stoke the fire. I like it. I like it. And we're getting toward the end of the live stream. Nobody but devoted community members are in here anyway, so we can stir the pot with each other. That's fine. I don't care. Good stuff. I feel like a majority in Southern Oregon, done like Kate Brown, but she gets it. Nice. I'd vote for Warren. Awesome. Great. That's two of you. That she'll get 2 votes. That's awesome, guys. That's great. You guys. So keep on supporting, man. That's awesome. She will be the nominee, and Trump can't win due to the media beating he has taken and the facts that we are going into a recession. Okay. I'm not going to comment on who I'd vote for since my politics are pretty non mainstream anyway, but it's way too early to predict who gets the Democratic nomination, let alone the election winner. I know, right? I have a Roth on top of the 401k, so I alluded to that program. Our Lives is a very devout subscriber of mine in the community, certainly. So 401k, I continue because my employer matches up to 5%, right? So we want to take that free money. Okay, I'll continue reading. But love to see money coming in the Roth IRA. I might leave it for my kids. Love the control of investments. Wow, that's really legit. That's in line with kind of my philosophy because I don't care about the money. I don't. I've said it many times on the channel. Now, if I make a killer income from this YouTube opportunity someday, I'll be so proud of that. To start something from inception and grow it into something worthwhile is so huge. And the verdict is still out. I don't know where this thing is going to go. I don't know. But as far as the investing thing, um, I know my plan works. I know it will work, and I know it will create generational wealth. Um, and I'm perfectly fine with that. I'm a happy man yesterday. I'll be a happy man tomorrow. And the money aspect of it, when I talk about sharing this small sliver of my life with the YouTube community, um, make no mistake, it is small. It's small. I've just got it fine tuned to where I'm very, very channeled into what I do. And when I do what I do, I want to do it. It's a project that I come back to. Like some people play guitar or some people do art. I do stock investing. That's my passion. Okay. All right. Um, I might leave it for my kids. I like that comment. I really do. I don't talk about generational wealth very often. I never talk about what happens to a Roth IRA when it does roll to the children. What ends up happening in inherited Roth, etc. Those types of things definitely prompts the attorney, the tax accountant, to get involved at that particular time and make sure that the heirs know their benefits when that does roll over into an inherited Roth. But well, what a great head start in life, you know. Um, um, money is one of those things. It's an interesting, it can be a very shallow topic if delivered incorrectly, but I'm a big proponent of what the byproduct of having money can provide for you. Big freedom in a lot of cases. Freedom. All right, if I had money, I'd go travel the world tomorrow. Had some real insight. Sorry you guys had to wait until minute 46 in the live stream to get that real talk from me, but that's the truth. Anyone from Canada now, Montreal, right on. You guys are making connections around the world. There's a bunch of people that watch me from Canada. All right. I visited Montreal, Ottawa, and Toronto last year. Awesome. You guys are still talking politics. Obstinate One, man, is rocking it out. I love it. See, I like it. It's fine. Come on in. It's the independent investor channel, not the political investor channel, but that's all right. Come on in and mix the pot. I don't mind you doing it at minute 47. Let's just not do it at minute 5. All right. Cool. So at this point, would it still be good to keep paying myself my bi-weekly portion into the RIRA, but just leave it in the account as cash and not busy stuff right now? Yeah, I think there's some value in that. I do. Kind of depends on your age and your tolerance. Okay, always those two uh, categories are very, very important. Where you are in your cycle. If you're 50, 55, 60, it may play into an answer about what maybe you're thinking about doing with your options. as opposed to if you're 32, 42, 22, a little different. Okay. I just know, I don't know how much juice you're looking to extract out of this current market right now. It's something to look at. Okay. It's just something to look at and make a decision now. Don't make a decision out of haste, because sooner or later, your decision making capabilities are going to be put on moratorium as far as I'm concerned. When the market starts to just go down, that's not the time to be assessing your situation. You're not going to come on to the Independent Investor channel and expect me to somehow save you from making a decision that you could have made right now. We're going to make it right now. We're going to talk about it. It's a scary freaking topic. Sorry. We're going to talk about it over coffee like a gentleman and a gentle lady community that we are, right? That's what we're going to do. Because while everybody else is talking about there will never be another recession and there's euphoria going on in the stock market right now, let's talk about maybe some defensive positioning right now. Let's take a different approach. Let's take a different angle to the stock market. Okay. Let's stop focusing in on what we could have made had we been fully invested in the market. And let's talk about strategically and safely and carefully building wealth over time. Carefully. All right. Man, people get too crazy about the market, man. Building wealth takes time. All right. There's nothing that the stock market that's going to deliver over the next 2 or 3 or 4 or 5 years that you should be somehow overreacting to right now. All I'm saying is take an objective look. That's it. Take an objective look. You owe it to yourself. If you decide to stay the course, at least you took the look. All right. A lot of people want to be conveniently naive up until the point where it's time to become emotional, and then they're pissed off and they want to make a pissed off decision because somebody talked them into doing something that they were fully responsible for. It doesn't work that way. Take some freaking responsibility, look in the mirror sometimes, and take some personal accountability for your actions, or at least the actions of somebody else that they've made on your behalf. All right. All right. Good stuff. Dan Tanks just lowered my contributions. Damn one. Sure, that's something you can do. Take the foot off the throttle. Dan Tanks has been with me for a long time. Throttle back a little bit. It's all right. Because when we do enter into this 2023 recession or 2021 recession, or Elizabeth Warren gets voted in as president and the market gets cut in half, that's going to be the time where I'm going to be like, okay, time to calmly step into the market, and we're going to engage this small sliver of my financial perspective here. And it's going to be a lot different than what we talked about when we were in this historic 12-year bull market, right? Now we're going to change philosophies. You're going to see a different application from the Independent Investor channel. It's going to be a lot of fun. All right. And there's going to be people coming on being like, the market's going to zero, Ryan. You're crazy. And I'll be sitting there aggressively investing, nodding my head and saying, yep, you're right. Yep, you're right. You've always been right. You've been right for the last 30 years. While I'll be working my way toward my $1 million retirement, okay, I'll be nodding my head like this, agreeing with all the naysayers out there that seemingly know everything about the stock market, and they've been talking about it their whole life, and they'll continue to talk about it into retirement. When they get to retirement, they'll look back over their lives and they'll regret being a know-it-all their entire life. And just stop for a damn second, sit back and listen. Listen for 2 seconds. All right. I'm not immune to this, guys. I listen to people all the time. And it is an absolute art to just sit back sometimes and listen. You don't have to agree, but listen for 2 seconds. It's key. All right. All right. So welcome, guys. I'm getting to the end of this again. There's just way too many comments for me to get to. I'm going to try to go out. I will shut it down at 2 hours. But I will get to as many of these as I can. I own Exxon. Don't care that I'm down on it. I don't either. I don't care at all. Just keep reinvesting that big dividend. That's all I feel. That's why I call it a bond holding. Basically, it's pretty interesting. So Andrew, Ryan, I agree with you. I've got a pretty big position in Exxon. I think I've got about 50 shares of Exxon, 52 or so. But Gen X dividend investor, and remember, leverage any tax shelters you can. The biggest expense you will pay in life is not your mortgage or your kids' college. It will be your taxes. Wow, that's legit. I love it. Sounds like a YouTube video. I expect that, Gen X investor, man. Good stuff. Really cool. I've just got to know Gen X investor within the last couple months, and I'm really, really proud to have Gen X investor in the community. I will recommend that people go check out that channel for sure. And that's based on recommendation. See if we can't throw together some sort of collaboration with Gen X Investor. I think we have a lot in common. Um, Speaks like me. I just appreciate comments like that. Very, very smart. I like that. A lot of smart folks in the community. This channel creator is one of them for sure. No doubt. All right. This market is about to get ugly as hell. Get ready to deploy dough in the depths of this upcoming recession. Well, that's some good advice. See, positive. Obstinate ones being positive. That's awesome. Good stuff, man. I think it was okay. I'm gonna try to cherry pick some of these. Kenneth Nogat, Lord Rothschild told JP Morgan, only buy in panics, never sell. These guys had large cash positions, though. You don't want your stuff vaporizing. Yeah, I agree. I just there's a lot of benefit to that. Um, I've looked at the prospect of what it could be if I just took all my wad and just threw it into the market right now, and it's just that's an insane position. No way. I'll get this money in there strategically, or a little bit more exposure than I'm out right now, but I'll always have a good amount of cash. Um, I didn't grow up with money, so I'm not about just willy-nilly throwing it around. I've made a lot and I've lost some, but it sure as hell in either case hasn't been from lack of trying. And if I deserve anything as far as my credit, you guys know that I'm a real freaking investor. Yeah. Oh yeah. I'm real. Yeah, it's real money. Not no get out of jail free card here. No pass go. All right. It's not Monopoly. It's real. All right. I have XAIX. Good. It's dropping some ticker symbols in there, Bob. Thank you for that. Um, if you're buying a stock right now in this inflated market, make sure that your particular stock has an enormous margin of safety. Now, I agree, and buy smaller positions. You don't have to get crazy, you know. I'm kind of limiting myself to some 10 share positions depending on what I buy. My LMT, NOC, Lockheed Martin, Northrop Grumman, Raytheon, some of those positions have been 5 share positions. That's it. I'm not screwing around. I'm not buying positions. I've got a cap of 5,000 per position. And more realistically, I'm looking at about a $2,000 cap on each single stock that I buy. Yeah, no doubt. And I'm not really doing a whole lot of swing trading right now. I'm not really entering some larger chunks of capital right here because I could get stuck with my pants down, and there's no way I'm going to do that in this market. No way. All right. Um, Most index funds are going to be the same small price difference. Right on. Good stuff. Good stuff. Monitoring, and we're going to start to kind of close it down a little bit, guys. I got 4 minutes here. If you haven't hit the thumbs up button, I've had 73 visitors. I've got 73 in here right now. So if I could get the thumbs up to go up, maybe the algorithms of the YouTube monster might pick me up. I don't know. See, now I've got 75 in here. So people are figuring it out. They're on there it goes. Awesome. Thanks, guys. I appreciate that support. All they want to do is spend money and party. There's nothing wrong with that. Spend your money, party it up, man. That's awesome. Oh, Jesus. I've got my greatest supporter in the group here. I've wondered about you, Mimi. Thank you so much for coming on. Oh, it's so good to see you. I've been wanting to reach out to you actually and talk to you. I hope everything's going well down there. I'm sure that it is in the land of palm trees. Thank you so much for kicking on. I'm sure you're killing it with your business. Really like to catch up and understand that your projects are getting off the ground. We have an incredible entrepreneur in the group, and quite frankly, probably a celebrity in my mind, to be honest with you. Very, very astute entrepreneur in the group. Just gave me an enormous tip, and I thank you for that. That'll go towards supporting the channel. Put a significant amount of investment in the channel, Mimi. Thank you for coming on. It's so good. I've been kind of thinking about you, wondering what you're doing, and thank you so much for kicking on. And I hope you made it through all the storms. It's been kind of odd down there in Florida. I've been kind of watching watching the weather kick in. I hope all is well for you, and I'm sure that it is. Last time you were right on the cuff of making a world change there, and I have no doubt all you need is time. That's it. You're way too ambitious to not affect this world in a positive way. Way too much. Thank you so much for that. That's awesome. Awesome. I feel like I owe you. Feel like I owe you another session, another phone call. I hope everything's well with the investing as well. So give me a shout if you need anything. No doubt about it. I'm here for you. All right. All right. We got a couple minutes. I'll go a little over 2 hours, man. There's no worries. I have nothing better to do than to maybe decompress with my evening. It's been a very, very challenging week for me, no doubt about it. So thank you for the opportunity for allowing me to come on and speak to you guys. What a great audience tonight. What a great audience. It's amazing how we can throw this down, and I don't feel like we're being redundant at all. I feel like we're really reaching out to some folks that have come in here and declared that they're brand new investors looking for a sap of motivation. No doubt about it. I've got it. And I give it away. I do. It's yours free of charge. I love to help folks. I'm slightly addicted to it. And as long as you guys are finding the benefit in it, I'm all about it. I'm there for you, no doubt. I'm your champion on this channel, and hopefully you guys see it the same way, no doubt. I didn't learn anything worthwhile about investing until I started listening to the Dave Ramsey show after looking up money on my podcast. A lot of people feel that way, and a lot of people feel that way, especially on the debt consolidation side. So thank you. I've got Kings fans 2000. It's almost criminal that they don't teach any of this stuff in high school. I concur with that. That program is one of the very few that are offered strategically through military training aspects, and the focus of those courses are debt consolidation, so working on your fitness to be able to invest. But I do echo that. I do have my own personal criticisms of Dave Ramsey. I do, uh, and they're legit. I just think anybody out there now that's I question whether or not the real intent of the benefit is aimed at where it should be, and that is with individuals. All right. Um, I don't really think, I mean, I've got somebody who just popped in, Miss Mimi, who in my mind is a real champion. And you may have never heard of her, and I think there's thousands of people like that out there who are trying to make a difference. Hell, I'm one of them. I am. And I think a name is in a name. That's fine. But I'm interested in the truth. What is the real impact of people? Okay. Are you having to pay for that exposure when you could just as easily seek it out online? Perhaps. Um, I think there's a lot of good people out there with a lot of good things to say. And for me, YouTube provides that avenue. And for those folks that have been positively impacted by it, where else in this world can you find something like that where seemingly it seems like everybody is trying to consume you, and for those folks that are reaching out and trying to build people up, that's what it's about. All right, good stuff. Thank you for that comment. That's really cool. I agree. All this crap is why I don't bother with individual stocks. Just buy mutual funds. You can, and ETFs weekly, and don't have to worry about all of this political crap. I like that comment. That's pretty good. I've got Justin Rhinesmith right below. Opinion on Vanguard Dividend Growth Fund, number one ranked for large value, 0.22. Expense and actively managed, 50 holdings. Feel like it's perfect for my long-term portfolio. I would have to look at that. That's interesting. Large value, expense and actively managed. Interesting. It must be part of their mutual fund suite or index fund suite. I'd have to look at that for sure. I don't have a comment on that, but you've perked my curiosity for sure. Thank you. I still own Alibaba. Can't sell it now. Don't sell it. You'll be fine. This reduction was headline news. Do you honestly think they're coming out of the New York Stock Exchange? I don't. Jesus, just a threat. They'll forget about it on Monday. It'll go up $10. Alibaba is a great company. You don't sell it down like this. No freaking way. I'm thinking about buying it. So if I'm thinking about buying it, you as an owner, don't sell it. You know, yeah, you're good. Thank you for saying that. Moving in the same direction. Awesome. I love individual dividend paying value stocks. Right on. Joe Carlson's program also revolves around that. And guy's legit. That's about all I got to say about that. Again, I'll be doing the coverage video with Joe as well. It'll be fun. I did give up on Altria this week, though. One of the few times I ever took a loss. Yeah, I would have held. I would have held true on that. I think you were right. You got a good entry on valuation. You may kick yourself on that one. We'll see, but yeah, I think it'll be back above 50 for sure. All right. Neat that they became an aristocrat. All right, guys. This is filling up really. Hey, listen, one of the most successful live streams I've had. I say that every damn week, be honest with you, but I just am tickled pink to come on every single Friday and get such a great response from the subscribers. Hopefully, you're extracting some value from the stream. I provide that for opportunity for folks to come on and engage, not only with myself but with the community. But I will close by saying this. Right now, we are in kind of a calming stage, and it benefits each and every one of us. I wasn't kidding when I said look in the mirror. I wasn't trying to be rude. What I was saying is it's so important to self assess. And I find this deficiency in people all the time in that it's always everybody else's freaking fault. All right. This is self directed investing. Okay. And this is why I always opt to be on the defensive side of the posture because I'm setting your program up to freaking win over time. We can afford to be a little bit defensive. Why? Because at the end of the day, I expect that the culpability has to fall with you as the individual. It just has to be that way. You don't get the benefit of coming on here and blaming me. You don't get to blame anybody else. You have to look in the mirror and say, what is the inherent message there that I could have learned? What could I have done a little bit different? And to take those lessons learned. And that's really what I'm trying to explain to you guys now with this calming phase that we have. Take a second look. Take a second look. If you're satisfied, stay the course. Staying the course can be based on a couple things: your tolerance and your age. Very, very simple. If you don't need the money, let it ride. Stay the course. That's fine. If you're not satisfied with your level of exposure, don't be afraid to take a little dab off the table. All right. There's nothing wrong ever with taking a little profit off of the table. Nothing wrong with that. Okay. You'll be glad you did it. And it'll allow your tolerance to be realigned with the amount of exposure that you have to the market. All right. Guys, thank you so much for making it a great live stream. We will be back with you again, not next week. Next week, I am taking next Friday off. I will be attending the Oscar Smith 6A high school football game, so a little bit of Friday night lights. I'm totally stoked about that. So I will be taking next Friday off, and well-deserved on my part, certainly, but we will look to re-engage on the week after. For live stream number 67. Guys, thank you so much for joining in. Have a great, great weekend. Look me up. Take advantage of that olive branch that I mentioned at the top of the live stream, and we will catch you back on the Independent Investor channel in 2 weeks. Guys, thanks a lot. Have a great weekend.